Welcome to today's Dojo podcast. As usual, I'm going to jump right in to changing the description on this live tweet so that people will find it more eye-catching. In the meantime, markets are way up. Bitcoin's pumping. It's no surprise to anyone in the dojo that I've become a bit of like a precious metals bug. I know, like bandwagon. Feel free to hate on me. But Bitcoin's up to like 94K right now, $35 away. Silver's up to nearly $80. Gold is up to, I don't know, nearly 4.5. K. ETH is almost 3.3, what, 3.26? Yeah, so really close. And it feels good, but also terrifying. So while I edit this description, do you want to give us your market just thoughts?
Yeah, absolutely. I mean, it kind of makes sense, right? Like a lot of people may have been tax loss harvesting, selling tokens that maybe they had losses on so they could coop that into the 2025 tax season. So that makes sense. I think like we definitely didn't have the Santa Claus rally, but like we have seen this kind of thing before where, markets have a nice rebound into the new year. Maybe we'll finally see the catch-up play that we've all been promised where, like the crypto markets have been struggling. Precious metals, as Steven is so into for now, is, maybe there's a catch-up play where Bitcoin moves and, people say, well, gold's at $4,500. Maybe Bitcoin needs to be 10% of that. And we can see a bit of a move up. So I don't know. We'll see. We were talking before the show started that some of the folks we know who are very into TA, that is not Steven and I, we're not big TA guys, but the people that we do know that are big TA folks still remain bearish. So, I kind of think that TA is a bit of a self-fulfilling prophecy where like if the charts look bad, then the charts perform poorly. And if the charts look good, they perform well. And that's just because like so many people, both algos, both like people who are actually doing this trading, look for signs in the charts themselves and not kind of like the broader fundamentals that are outside of it. They believe that everything is represented in the charts before, people know it publicly. And so we'll see how all that stuff plays out. But yeah, I mean, we have seen like a nice little recovery to 94.
We broke 94.
Yeah, 94 for Bitcoin. We're at, almost 2,300 for ETH. Sol up to 140. Hype back up to $27. That was one that had been
20. Yeah, I was gonna say that's one. People they've memeticked it or memed it or I don't know. Everyone knows that hype is going to three figures, and I think it's a genius narrative, right? But when you start to see it too much, it feels less organic. Mm-hmm. But hey, it's catchy, makes me think about it. So hopefully hype does go to three figures. It's pre-programmed, just like ETH to 10K.
Right. I saw a post about ETH going to 10K today, and I was like, "Man, that like."
Did you?
Yeah. Once those like stories get told, they're just they're ETH. they're easy to repeat. I think
yeah, exactly right. I think that's the whole point. Make something easy to repeat. Say it's a form of I call it witchcraft. But what do you think about the new trading view? I know you're not a big trading person, but I do not like it.
No, I don't like it either. It looks just like they've kind of simplified everything down.
It looks like the app, when you go on the app and you get like an at a glance kind of look.
Yeah.
But I don't want the app on my desktop.
Can't you go full chart though, and it'll still show up the same?
Exactly, I know. Yeah. It took me a disturbingly long time to figure that out.
Yeah.
I was like, did they just nerf trading view altogether? And all we see is this green line.
So what's I mean, I know you're a gold man and you're also a silver man. What's it going to take you to get back into the crypto markets? Like, what does it take for you to buy Bitcoin, ETH? I don't know, whatever your soup du jour is.
Yeah, I mean, the easiest answer there is like, trading is not my forte. I made some, I've lost some, but the best thing for me to do is outsource the trading to people who literally do this for a living. So we have Groot in the Discord, and he has called the tops and bottoms fairly well for the past 3 cycles. So when he says he's jumping back in and he thinks that the bottom is bottomed, then I will excitedly follow along.
Does he literally own nothing? Like, does he not? I thought he always like kind of kept.
I think he's when he exits, he exits. but he's fairly still long, I think, on stocks and playing with those right now.
Interesting. Got it.
Yeah, I mean, he likes the Bitcoin chart, but he still doesn't think we're heading back up to new all-time highs. Hopefully we do. I think he did say something like, if we do something in the thing and jump over the whatever, we'll maybe get a 150. I don't know. Again, I'm not a trader. I'm just in it for the yields. That said, holding Bitcoin is something that I like to do generally, but I sold at like 105, and I around here does feel like it's a good buyback area. But goodness knows, the moment I buy back, we're going back down to like 65K. So gold's been comfy. I think if gold was really underperforming, if my silver was really underperforming, and if I wasn't getting good yields on them, like they're servicing all the things I like. Like I'm getting good yields on them, so I'm having my daily fun. The price has been good, so like my portfolio is appreciating. The one thing I am worried about is that two of the smartest people I know, sort of in the TradFi space or like in the equity variety space, have said typically when precious metals do a run up, you don't want to be like jumping on the bandwagon because they have pretty horrific crashes and then they take years to recover. It's not like they're not super cyclical. They'll have big run ups and then blow off tops and then kind of like just slowly grind downwards or sideways for what feels like eternity. So that's kind of like my cautious part. But yeah, so I don't know. I'm just having fun, getting yields and trying to beat the dollar.
So are you? What's the long term plan for your precious metals? Is it like you're trying to try to time the top and get out at when gold hits the generational 5K and then slips back down to, I don't know, where does it go back to? 1,500? 2,500?
Yeah, no, I'm going to sell the Pico top and then buy again when it hits the bottom.
Oh, okay. That makes sense.
That's it. Yeah, it's a blast. No, I mean, I have no idea. A good diversity portfolio is something that we've been talking about like recently. What does that look like? Well, hedging against various different things. I think we talked about it last time, which is like gold is a different hedge than like holding the S&P 500. S&P 500 is effectively you're betting on things continuing as normal, right? It's like you're betting on productivity. You're hedging against nothing happening. Mm-hmm. And whereas gold is like you're hedging against something happening. You're hedging against hyperinflation, dollar devaluation, loss of confidence in the hegemony of the petrodollar. And then crypto is like you're hedging against fiat currencies. You're saying, well, the inflationary model is broken inherently, and this thing is eventually just not going to work. And so the digital dollar is going to be the de facto currency of the new world order, or whatever it might be, whatever your thesis is there. It's not private money, but there are like private money theses as well. So it's all different narratives, and I think like having a good basket of different narratives is probably smart. And then maybe you allocate based off conviction or allocate versus based off market cycles. But that's like if you're a long-term kind of investor who's just protecting yourself from world circumstances. Other people just trade. They're swing traders, they're like macro traders, and they at the end of the day they just want more dollars. So my own thesis is get hedged, make yield, and
be happy.
And so yeah, I mean,
yep,
and be happy. I know you don't typically sell out. You typically hold your assets even throughout the bear market, and then
that's not true. I this time around I did a great job getting out of alts when it was time to get out of alts, but I did not do a great job of getting out of the Bitcoin. I did cut down ETH into Bitcoin, but so I guess I cut majority of my alts and then I held all my Bitcoin and then sold some ETH into BTC. Which is what I kind of ended up doing. But I like, it didn't feel like toppy for me for Bitcoin. Maybe I just I think I do have built some kind of like long-term convictions around that. Sure. Much less so around the the souls, the ETHs, and if anything kind of farther down the chart, even
I mean,
less
this chart
so.
does not look bearish.
It doesn't look bearish is what you're saying.
No. But I mean, you zoom out sufficiently enough and of course it looks nice.
Right, of course.
8th largest currency in the world, or 8th largest asset in the world.
Yeah. I mean, and we are starting to talk about interesting stuff quantum computing and Bitcoin and what all that stuff means. I think it's going to take a while for like like retail participants to be worried about that. I do think that there'll be a time, like sometime in the next maybe like year to 2 years, when like the risk of quantum computing to Bitcoin becomes like the topic. And I bet you we have like some pretty severe corrections because of that. Also, just because like the Bitcoin community, not that I know a ton about this, but from what I've heard, not very good at making decisions and coming together to move forward and make changes to the Bitcoin protocol. So,
Yeah,
we'll have to see.
Like I said, because it's the 8th largest asset in the world. There's now like it's like Game of Thrones, right? For who controls the Bitcoin, who controls the spice. So you will get some interesting sort of factions and politics and this and that if you ever follow along in the Bitcoin world.
Right.
So let's talk about the stuff that we are good at, that we do know, which is yields. I have been enthused to be back in the Uniswap V3 trenches. I know it's like one of the OG types of yields. Here's my revert page. I am hiding a couple of my positions just because I don't want to give away all my secrets. But these are two that I think, fairly absorptive. Like people can come in there with $1 million and I'm not going to get too diluted. And I think they're great. So, like oftentimes we'll look for Bitcoin on Bitcoin yield. So, there's been like LBTC, WBTC, or FBTC or BBTC paired with, wrap Bitcoin. And if you could get 6% on that, you were crushing it. So for me, getting 6% on gold is I feel like I'm crushing it. I feel like this is outstanding. I think the longest time I've been out of range was like 1 day. And I was fairly confident it was going to go back into range, and then it did. So I was, super happy about that. And then this XAUT, USDT, I use that tool that I showed you guys a while ago to sort of like predict a good range. And as long as I'm getting over 15% in fee APR, I should be beating the implied volatility, impermanent loss that I expect. And so I have been, which has been really nice. Of course, gold has been even more flat than I had anticipated, which is really good. So I could have even gone for maybe even a slightly thinner range, but this has been awesome. So I have been enjoying Uniswap V3. I'm also doing some buy real, which is same sort of thing. I've talked about this before. Shout out to Chow in the Discord for convincing me to come back to this, because I left it for a while because the estimated APR was like 4%, 5%. But if you, I know I'm like name dropping a bunch of random people you guys don't know, but they're all like Discord OGs. But Flow Locker, who's like the concentrated liquidity guy, owns his own concentrated liquidity like channel and stuff. He was saying he goes wide range and then just volatility happens. So he goes really wide range, mostly to hedge against impermanent loss, and then just waits for big crazy volatility days. And on those days, he'll make so much in fees that it compensates for everything else. So I've been trying that. And so I'll have like 4.4%. And then I don't have to wait a week. I wait 1 day, and the next day is like 550%. And then again, it goes back down to 3%. I don't know what they're tracking, if they're tracking like the hourly average or whatever. But it's super volatile if you just follow this. But if you do the math, which is what I've been doing, I've been annualizing something between like 50 and 75%. So
and what do you think causes this volatility? Because I was going to say, I wonder if we see the same level of volatility in these kind of precious metal pairs as we do in crypto pairs, where there's like, a lot of DeFi activity, or like the price has a lot of volatility or something, right? Mm-hmm. I wonder what it is that causes all of a sudden someone to go and buy a ton of gold or a ton of silver.
I think it's arbitrage.
Interesting.
I think it's price arbitrage. So if the spot price on like, the spot price of gold changes by 5%, all of these markets have to follow. And they don't just follow by like an oracle. They're not being informed by an external oracle. They're being informed by their own market price. So there's, you can kind of call it contango or backwardation. There's a disconnect between the market price on the DEX and the actual value in the external world. And so I really don't think it's like people going and say, oh, I got to go buy some gold. I'm like so eager to get some gold. I think it's just arbitrage bots. So they're flooding volume whenever it's profitable into these things. I think, right? That's sort of what Mitch or Mike from Curve was saying to me when we were talking about yield basis. He said the majority of volume for things like Bitcoin on chain or rep Bitcoin is just SexDex arbitrage. It's if there's a mispricing because there's not enough volume, then eventually that mispricing becomes profitable, and then there will be as much volume as it takes to close that profitability. And so,
have you ever
that's what I
looked
think's
into
happening.
LVR, which I think stands for loss to, I can't remember. Basically, it's the idea that like these arbitrage bots are over time just like extracting value out of these LPs by, you know, doing this arbitrage and oftentimes buying it lower on chain than it is off chain and then arbitraging that. Um, you know, and it's not really impermanent loss. It's you know, it's its own kind of like beast. I wonder if like over time, if you had this position open, you would see you know, losses related to that. I mean, it kind of feels like you wouldn't because you're making some pretty decent APR, and then also, you know, I
Yeah, why would
imagine.
that be bad for me? Like they're getting the price to where it's supposed to be, which doesn't seem like it's taking any money from me. And then conversely, I'm getting their money that they're paying for the swaps.
Yeah, I mean, I think it's like a theoretical value that like an LP, you are posting like, you know, the value of your LP on chain, and someone is profiting from them being able to arbitrage the difference between what you're quoting the price as and what someone else is quoting the price as, and there's a value to that. Um, anyway, I've looked into this in the past, and I didn't 100% understand. It was like a big all the rage last year, like talking about LVR and stuff, but it seems to have
Mm-hmm.
have died off a little bit. But
Well, I think the like one part of this is that you know, oftentimes with really good V3 pools, you have you know, I don't want to use any mean words here. You have people who will race to the bottom with fee tiers to extract all the volume. And I think if they are also arbitraging like SexDex rates, they may be more incentivized to say, well, you know what? I don't really care about the fees as much because I'm making so much money from the SexDex arbitrage. I just don't want to be paying so much. So I'm willing to throw in, you know, $1 million into 0.0003 fee tier on Uniswap V4 and then just route everything through that. Maybe, or, you know, something like that. Or I guess that's not exactly right because you can arbitrage literally any pair. It could be 1%, you know, so like some of the things I'm in are 1% fee tiers, and the only reason they get volume is because it's profitable to arbitrage them, which is great for me but terrible for people who are buying it when the arbitrage isn't there. So who knows? I'm just glad there's volume. Why that volume exists, I think there is some aspect of like gold and silver right now are fairly attractive. They're fairly interesting. They're fairly exciting, but you can't do much with them. So I don't know how much is organic and how much is arbitrage. I think a lot of it probably is arbitrage. And I've been happy to provide liquidity as a service for all the fine folk who want to be speculating on these assets.
yeah, yeah, good to see you back in
I
the.
think BuyReal is coming to Mantle though, which is like I mean, it's not as random as you'd think because BuyReal is Bybit's like Dex on Solana, which is a weird place for it.
Well, it's like their
And
equivalent to
Bybit is
PancakeSwap, right? Like PancakeSwap has been
yeah,
does a.
but they launched first on Solana, which is kind of weird.
Yeah, but that's where I think they launched it when there was a ton of activity on Solana. I agree, it's kind of a little bit
Okay,
weird,
that makes more
but
sense.
yeah, I mean, you know, it is kind of cool seeing these centralized exchanges, seeing the value of having a decentralized.
Oh yeah,
exchange.
and all the stock fools, which is kind of cool. Oh darn it! Can't look at them.
Yeah. You think that's going to be like a big thing? Like you're people have been poo pooing like precious metals on chain. Obviously, you have gone down this rabbit hole. Do you think that then, you know, opens the door of precious metals being at least moderately successful on chain for all these stocks to then, you know, pop off? We talked about this a little bit last, I think maybe 2 weeks ago or something like
I
that.
mean,
But
excellent point. Excellent way of putting it. I do think it's like a foot in the door kind of thing where yield bearing Bitcoin, yield bearing ETH obviously had its niche, and it's like so native to DeFi that it's so obvious that it should be the first thing. And then I think after yield bearing ETH became really big, then we saw yield bearing stablecoins. So in my opinion, we had yield bearing ETH and excitement around yield bearing ETH before we had excitement around yield bearing stablecoins. That had so much product market fit that it became the narrative and has been the de facto narrative, I think, for years now. And like it's the PMF. I think next what we're already seeing is like some yield bearing gold. So we have Oro on Solana, which I mentioned before. Someone sent me a new yield bearing gold today, but it's like, you know, 1/1000th of a troy ounce. I'm going to look into it. I don't want to talk about it in case it's terrible. And then on top of that, we have like Yo is doing their own yield bearing gold vault with IPOR. And I anticipate that more more people will be doing yield bearing gold. They'll find a way to get yield on it. They'll make it composable. Also, because there's a fair amount of gold that's just being thrown onto Aave or thrown onto Morpho. And so there's a potential opportunity for people to lend their gold at a Bitcoin rate. So lend your gold at 15 bips, 50 bips, whatever. You know, hey, you're happy. You just want to be holding gold. And then people can borrow it. Maybe they're getting 1.5% or 2% on the yield bearing gold, and they can leverage that up to a 4 or 5, 6%. And I think those become interesting products. So,
but it kind of feels like a little bit like yield bearing Bitcoin. Like it's this thing that everyone wants to exist, but like I couldn't point to a single, like even medium successful Bitcoin product. Yeah, but like which one? I mean, that probably is the exception to the rule.
That's a good point.
It's just like the target keeps on moving because like people want yield on it, and like the yield sources keep on changing, and so there isn't like one dependable place that people seem to be able to get yield. That's one problem. You know, like eBTC. I love the guys at EtherFi. I think they've done great, but that's feels like at least relatively speaking for them like a failed product. I mean, it probably still has like $200 million in it, right? But like if you compare that to how much yield bearing ETH they have, which is in the billions, or you know, yield bearing dollars they have, like much more success there. So like there just are not very many examples. You're right. I shouldn't say there aren't any because I think Solve probably is the exception to that rule. But outside of Solve, there really aren't very many yield bearing Bitcoins that have been successful, that have gotten integrated in a lot of places, that have a lot of usage.
I mean, you know, Lombard has fallen off largely. I mean, hopefully they do really well, but no one really talks about them anymore. What was the other one? It was Lombard, and then Lombard was building with...
There was... Yeah, there have been all the Babylon stuff.
Babylon, right. Yeah, there was Babylon, there was Lombard, there's... there were a few different Bitcoin chains that came up, like Core was one of the chains. Hemi was another one of the chains that was like Bitcoin centric. I think a few of these actually even have yield bearing Bitcoin. But so Bitcoin is a substantially larger asset than Ethereum, but yield bearing Bitcoins have not taken off in the same way. People have argued it's because the profile of a Bitcoin maximalist is dramatically different than the profile of an Ethereum maximalist. So like a Ethereum maximalist, they're familiar with yields, they're familiar with DeFi, they're familiar with on-chain activity, they're familiar with transacting in the world of EVMs and protocols and yield. And a Bitcoin maximalist is like they're familiar with holding their assets and optimizing for security and optimizing for never losing their Bitcoin. They're not optimizing for yield because they think the price is the yield, right? The price of Bitcoin is the thing that's going to make them the money, not an additional like 4% on it.
Well, and to be fair, there also is yield basis. I think, you know, you mentioned them earlier, but I think like they do have $200 million. I'm just looking at their website right now.
I think I need a VPN for them.
$200 million. Their fee APR. Now, not necessarily sure this includes impermanent loss, but the fee APR, which is the FT, what you're hovering over there, 10% for wrapped Bitcoin, 4% for TBTC, and then nearly 10% for, you know, Coinbase Bitcoin. And then if you want the token version of it, like, so you're getting paid in the yield basis token, and you're getting paid 11 to 24%. So pretty incredible stuff. You know, I haven't been following this close enough to know. I know they did have some issues. Like I think on 1010, they took some, I think, relatively small loss, but then they like made it back, I think, in fees. So like, you know, that was a pretty big stress test for them. So maybe this is like, you know, we'll start seeing all of these, I think they call them like YB, you know, wrapped Bitcoin all over the place. On Aave or on like Curveland or other places. That would be pretty cool to have like a yield bearing Bitcoin that's getting this. It's not like
like a de facto yield bearing Bitcoin that everyone kind of trusts and feels comfortable with. I don't know if this is going to be that because of the underlying mechanism that doesn't feel nearly as safe as like staking. But just having one would be great. I mean, Solve is one, but we never saw it anywhere because they had, like you said, they had like 15 different kinds, and so they never really committed to king making one of them.
Right. That's the issue for sure.
Yeah, because I mean, when Lombard was a narrative, it was fairly ubiquitous. Like you could go onto most major borrowing and lending platforms and find LBTC. You could go into LPs, find LBTC, wrap Bitcoin. Pendle had LBTC, so it was doing all of the things you'd want a yield bearing Bitcoin to do, but it didn't have any yield. It was It was just the point speculation. So it would be cool to see an actual yield bearing Bitcoin like follow and take that path.
And the other cool thing about yield basis is they're generating like a lot of like fees, which is being generated out. I think so. It's like, I guess it's not crazy, but like, I think that they've made, I want to say like $5 million in fees or something like that, which they're distributing to like the YB holders. But yeah, this was something which I think, people were a bit skeptical about. But so far, they're maybe 6 months into their launch and stuff. It seems to be doing pretty well, and also, not had any major losses. It's also expanded the supply of Curve USD massively. So interesting to see like Curve build, or like Mitch building within the Curve ecosystem and actually kind of like benefiting the broader ecosystem, not just one specific protocol.
Yep. Yeah. Good for him. We've talked about this before. We're not going to like get into it too much, but yield basis solving the IL problem, and seemingly doing it, which is something that I was personally very bearish on. I was very skeptical of. And sure, we have like some down days. I think this is the NAV. I wish they just called it NAV. I wish they called it something different than redemption PPS. But this looks like it's effectively the NAV. And I don't know. It looks like more or less upwards. I wouldn't say like too up and to the right, because this is super flat from, I guess, like last week and a half ago. But yeah, these are good charts. These are good looking charts. So hats off to Mitch. Go get him another mansion. He's earned it. Now, there's a lot. We're so close to $80. So I am following silver, and I know it's probably so boring for everyone else, but exciting for me to watch. Now, neutral is one of those things that we keep talking about, and one of the reasons why is because of this weird mispricing on Pendle. And so what happened recently, which I thought was kind of neat, was that the staking ratio went up on neutral. So more of the NUSD was staked than it was last week. Last week it was at like 47. This week it's at 55. And so I guessed, I think you guessed too, anyone with a brain would have guessed that a higher staking rate would mean a lower yield, because it means more of the NUSD is now taking from the yield pop. So the yield is being generated on the back end. So all of the yield being generated does not change by how much NUSD is staked. The APR changes by how much NUSD is staked, because it's more people participating and taking that yield that is being generated. So, all else equal, if the staking rate increases, the yield should go down. But what we saw was that the yield actually went up at the same time the staking rate went up. So the staking rate is now at 57%, even more higher than 55%. And we've gone from 12.5 to 14. So that's great. I think, eventually we're probably going to go down, but it's been cool to see, because I personally am holding some of these YTs on Pendle. And I think that my entry price is like 12% or like 13%. So I'm hoping that I get a week of not only the crazy points, but also positive yield. That would be cool. I'm getting paid to farm points. Mm-hmm. But even just like holding, maybe you have some other ideas here. We should look at Pendle, but just if you're like just looking for a stablecoin to hold and not even do leverage or anything fancy with, SNUSD seems to be one of the highest yielding ones out there.
I'm in the LP for
almost
this.
No exception. What's that?
I'm in the LP. I know you bought YTs.
Yeah.
I'm LPing it. That's kind of been
LPing is the safer version of Pendle.
Yes. Well, PTs is probably the safest version of Pendle, and then maybe LPing, and then YTing is like buying YTs is maybe the most risk on. But yeah, it's getting 18.5%, which is pretty nice. So it's like
if base APY is fee, so even if you have no Pendle, you're getting 16%. That's nuts.
Yeah. So it's pretty good, because you're not getting the full 14% from the underlying yield, obviously, because part of it is in the PT, but the ratio of PT, I think when I looked at it was only like 25% in PT. So you're holding 75% of the underlying asset.
And you're doing the SNUSD, not the NUSD, yes. Right?
So yeah, 22% in PTs, which is pretty close to the 25 I was just saying. So you're earning most of the on-chain yield. You're getting 3% from PT yields, and then you're getting a nice little boost there from the Pendle rewards. Most people don't actually have staked Pendle, so you're not getting the full 5%. You're getting more like 2%, but still, you're beating beating the rate, just LPing this over holding it, because you're also, I think, getting. Do you get a points boost from being in Pendle for this, or is it the same as if just you normally holding it?
Yeah, you do. 25x, which is fairly high.
But is that?
And it's on the SY, and it's 75% SY. So you really are getting a substantial amount of these points here.
But I'm just saying, is that higher than just holding SNUSD, like vanilla? Oh, okay, nice.
Probably. I mean, I said it so fast with so much confidence. I think so. Let me see. Protocol. Do they tell me?
Seems like a little further down. They were showing stuff.
Well, it says daily points, but that's not really super helpful.
Yeah, here's like the different point stuff.
But I don't see any multiplier.
Maybe.
I mean, I would. Yeah, I'd imagine that's not really. What you could do is see how many points are going out, 1.36 million points, and then extrapolate from there.
Right. Yeah, probably not going to do that. But anyway, I think that's like a pretty decent play. And then
NUSD gets 50x.
Right. And so if you really want the points, then you can go, just hold NUSD. But the problem with that is, like, for example, the Pendle LP is getting like 2%. So, I'm definitely in the mode right now of like wanting my yield and a little bit of sprinkle of points on top rather than like points maxing. But yeah, how has the YT play been going for you? Have you so you bought when the IY hasn't changed much, right? So you haven't
no, I mean, I've definitely lost more than I've appreciated in real yield. But it's been fairly insignificant. So my goal was to be paying somewhere between 2 and 5% for the points. And then assuming I'm going to get between 8 and 9%. And so I've been paying around 1.5%, which has been really good. So dashboard, I'm going to dox all my YT positions. Yeah, this was a test position. I still got $1 in there.
Did that say 1 billion?
Made almost.
Is it a B at the end there, or is that I'm just
100%? A B?
It looks like it says 1.0026 B, but maybe that's just
that is an 8, but that would be cool if I had a B in there. Billion. SNUSD. Yeah. So I've lost $300. Oh, well, yeah. So my net P&L is $200. So I've lost $300 on it. I've had it open for a while. It was like a 2K position or something. So I feel good about this.
Okay.
I feel good at 25x. We'll see. And then IUSD, I just knew that I was just paying for all this. So I get no yield here. But yeah, so I mean, we'll see. I've said before, neutral is one where I have almost no information about the season one. So usually we can get something like, we're looking between 5 and 7% airdrop. We're aiming for early Q1, we're capping at this many points, or, we're looking for this or that, or the other thing. We have valuations for that, but with neutral, flying blind. And I kind of, don't take this as an actual bullish sign. It's completely speculative. But I kind of like it just because the ones that I'm not expecting or that I have no insight on feel the most exciting when they finally happen. Maybe they're not the best. They feel like they are the best, but it's probably a bit of a surprise just factor. But go ahead.
Yeah, I mean, I clearly like neutral. I'm in this LP that I was just talking about there. I also got a small position in the pre-deposit campaign, and to be honest, I've been pretty frustrated with that. I think that they did a pretty poor job on the pre-deposit because it was supposed to be 10% real yield, and it being 2% real yield. We got a 26x multiplier for the points, which is basically the same as holding the SNUSD, which gets also 14% yield, right? So it feels like the pre-deposit people got a kind of raw deal a little bit on that. So my point, I guess, is not having a lot of information is interesting and is a different approach to what a lot of other projects take. But that isn't also necessarily a good thing. I deposited into the pre-deposit without knowing exactly what I was going to get from it, and it was a disappointing one. So hopefully they learn from that and then they do a bigger airdrop or something. But
right. I was going to say, but thank you for your service, because my understanding is that the pre-deposit campaign is one of the reasons why the staking rate is so low.
Oh, there we go. Yeah.
Because you guys are participating in NUSD and then getting a portion of the yield or something. I mean, hopefully it ends up playing out. I mean, it would be good for them to benefit their pre-depositors in some meaningful way, because really the pre-depositors take on the most risk. They're early. They're playing with it before it's tested. And they're saying, do whatever you need to do with my capital. Just give me points.
Yeah,
So
which is
I hope
fine, but they just didn't really like compensate
they haven't
people
seen
for
them
them.
do that yet.
Yeah,
Yeah. Well, if you hear that neutral, go reward your pre-depositors more.
exactly. Exactly right.
Yeah. So that's been one thing, and I've liked it. I hope it pays off. I'm not chucking a absurd amount of money at it. So I'm not. I no longer make big bets on YTs because you can get wrecked that way. Definitely some widow making plays. I've seen people do insanely well with like usual season one, where you quintupled your money or whatever. But for the most part, they can be they're widow makers. Be really careful. And then another one that's kind of like in the same vein, of course, is Solstice. So when you're talking about like what are the interesting season ones, Infinify, Solstice, Exponent, Yuzu, which I have up here. Yo is still in season one. A few of the stablecoin products I think have died. So actually, that's an interesting statement. Before we move on, which stablecoins didn't make it to season one?
Level.
I would say
Level Finance is the biggest one.
Level Finance is one of them. I'm fairly confident that Yulu or U, whatever the YU one was.
Oh yeah,
that's not
Yulu. Yeah.
Yeah, that's not making it to season one. Stream didn't make it to season one.
Did what was the one like DUSD? I forget what.
DEUSD didn't make it to season one. I don't think so, at least. That was Elixir. Maybe Elixir did. I don't know, but they ended up dying. So like, there's a field or a graveyard of these stablecoin products that never made it to season one at all. And so you really have to recognize that before aping into the YTs, because it's a bet on not only that you're speculating like that there's a mispricing in the IY, but it's also a bet that they'll make it that far. And there have been so many that haven't that you do have to keep that into consideration, which is also why I think that PTs should, PTs maybe should be even a little bit lower because of that possibility. I know Pendle might not like me saying that, but it makes sense. Like the YT people should be rewarded for taking on all that risk in some way. But also we've seen like Merkle rewards. I don't know if you checked that out, but like on Plasma, if you go to Merkle, they're literally paying people to buy the YTs for a few different markets, which is kind of neat, kind of interesting.
Yeah, definitely interesting. Well, let's just run through the PT. Can we just take a quick gander? I know we're kind of running into time, but I do think it's always just an interesting state of things to look at like the PT rates across Pendle, and just like where we at, like what is
where we at
available in the like plus 15% range. Like, are we getting back into that? Like, so there's the first one can't count it because there's like $2,000 of liquidity, so that doesn't count. The next one expires in 8 days, so like not super useful to look at. But that asset's been super.
And we did look at it. This was like backed by UAE real estate, which hey, maybe it'll do amazing. But those ones,
I thought it was backed by. I thought this was like a Korean T-bill project, but I don't know. Maybe I could be wrong.
You could be right.
No, it does say real estate gold holdings.
Yeah, I think you are right. No. Well, okay, so it is UAE real estate.
Yeah. No, you are right. I think you're
including
right.
it. Yeah. Maybe it's not familiar, but there is also like T-bill.
Then Yuzu had like almost 15% for 22 days. That's not bad.
We kind of like so the reason why people like Yuzu is because it's created by and backed by a person or like an entity that's been in the space for a very long time, right? Boros has been in crypto for a fairly long time. They've participated in a lot of projects. They've mostly done VC work, I think. And now they're sort of like in the curation space, making their own protocol. And so I think that's why people like it. Also, they have accountable. So they have an accountable dashboard. They have real-time proof of solvency. I even think they show their wallets. Actually, I'm almost positive they do. So you can literally just go check their solvency. So that kind of gives them all of the necessaries to make them a fairly investable product. So I'm not saying go ape into it. There's not a ton of liquidity, but like those are all the reasons why I think it's different from like the thing we just looked at, which was STHUSD, which again, maybe it's great. Maybe it's the future of France, but really I get the willies when participating in real world assets like that, just because of the history.
Yes, not Yuzu, but for the other one above it is the real world assets.
Yeah, for the dud.
Yeah, and then we get into Gaib.
This is Gaib, which people love to hate.
People do love to hate.
Gabe hasn't burned anyone severely except for their airdrop, maybe.
Yeah, the airdrop was a huge mess, but I don't think that people have like lost out on the assets.
Yeah, exactly. So
Yeah.
The people who were the loudest fudders were also investors in the largest competitor,
USAID, which is notably not in anything we've seen like in the top markets. I mean, I guess maybe we start talking about like liquidity. It's pretty big, but anyway. Then we've got 3Jane, which is another one that I like.
By the way, here's some alpha for those of you guys who are actually live watching. They just increased the caps
for 3Jane. Mm-hmm. Oh, nice. Yeah, I've been in that one for a while.
So if you hear some ledger noises in the background, that's Mara feverishly getting in.
Oh, I'm already in. I've been in. I got in early, and then I added. I can't remember when it was, like the second time they, or the first time they added like capacity. Anyway, this one's pretty good. I don't know. I mean, I like it just because it's like an actually interesting product that's doing something different, right? Like
exactly right.
I hope they don't get mad at me saying this.
And if it can be the leader in that, then there's a chance. Yeah.
Exactly. Like, I mean, I think this is a great season 1 to farm. I'm like not sure if this will be a like product that is around in 2 or 3 years and is like super successful. I wish them the best. Like I hope that it is that, but I'm not sure that it is that. I'm just like, it feels like a novel thing. It feels like something new for the market to price. It feels like the season 1.
And it feels like they're doing it the right way.
And they're doing it the right way.
Which is like, you have to connect your bank account. You have to sign legal agreements. You have to effectively dox. But once you go through all the hoops, then you can actually take out completely unsecured, uncollateralized loans.
Yes, exactly.
And the USD3 is a senior tranche. So we could literally spend an entire like 20 minutes just talking about 3Jane, but last I checked, roughly 14% of the lent capital, or 40% of the capital they have is lent out in these uncollateralized loans. Maybe it's between 12 and 14%. That's roughly the same amount of USD3 that's staked. So if 100% of the loans defaulted and paid back nothing, which is highly unlikely, USD3, the senior tranche, would still be unaffected because it would all be absorbed by the junior tranche, which is the staked tranche, which is getting like a 27% yield right now, which is nuts. I don't know if I'd go into the SUSD3 just because I don't know the frequency of people defaulting and what like a.
Have you ever gone and like looked at some of the positions? It's pretty fascinating to see how much people are lending against what. I think it matters less. Like, so defaults, I think will definitely happen because like people just have like, a couple $1 million of hype and they're borrowing stablecoins against people like looped Aave positions.
But I thought they were uncollateralized.
Well, yeah, they are uncollateralized. Well, like they have. So the way it works is this: you have to show a wallet and you have to have money in your wallet, right? And so it's not like it's collateralized against that. It's just like proof you have money, and so you're borrowing against like your on-chain value,
right?
And then you also are showing your like social security number and your credit score and your bank account and all that other stuff. And so if you default, they just come after you in the real world. And like what makes it scary for me is not clearly people will default because clearly degens are going to borrow too much against their on-chain positions and they're going to get wiped out. Like that's going to
whatever,
have to happen, right? Have to happen. But the real question for me is how like strong are the legal agreements people are signing to do this? How easy is it to find them in the real world, to take them to court, like do all these things? Or are they just selling these claims to like debt collectors in the real world for cents on the dollar? And then like what loss does that then socialize to the junior tranche? Like those, it's like the off-chain component that I think really matters here. And I personally just have not like looked into it enough to feel comfortable to deposit into the yieldy one, but like clearly like it's earning 27%. I think, there's probably a lot of people that are skeptical of it. There's probably a lot of people that are nervous about it. And the brave souls that are doing it are being compensated for it. 27% in this kind of market is pretty fantastic. But also kind of shows.
But people should not expect staked USD3 to be an up only.
Oh, no, but that's what I'm saying. Like
there will be.
Who knows if they're being compensated adequately? Like maybe 20%, 27% is like way more than it should be. Maybe it should only be 15 or 20%. But like clearly there's enough people that are scared about it that it's like an outsized return kind of thing.
Right. And as a reminder to people, a junior tranche takes on leveraged exposure to losses because the junior tranche covers all losses, even though its TVL is not the same as the TVL of the utilized capital. In this case, it happens to be. So in this case, if there's like a 1% loss on all loans, the junior tranche is only going to take on a 1% loss. But that's only because roughly the same amount of USD3 is being used as is being lent. Now, so just remember, junior tranches do have that caveat that they typically have a leverage exposure. It's cool to see Noon up here with 2.5 million. We used to talk about Noon a fair amount. Now they do have like underlying exposure to private credit, to CLOs, but they're also doing more like DeFi native stuff recently, which I think a lot of projects have done. We saw Resolve also kind of move in this direction, where now they're lending on Fluid and Aave. I think they're maybe even doing the Aave Athena loop, which is kind of cool. So yeah, shout out to them. This is more liquidity than they've had historically, and 14%. 22 days left, so not a long time. The next one, obviously, we like neutral. We've talked about neutral, 57 days, 14-ish%. Look at this. So the real yield, the on-chain yield is 13.97. The IY is 13.85. So theoretically, right now, you're being paid to farm 25x points. Now, it's not going to exist in perpetuity, probably, but that is the case right now. Mm-hmm. Junior USDE, we like this one, though there's not many data. I mean, sorry, I shouldn't say we. I'm not going to use the whole we. I like this one. It's Strata. But here's a caveat. I don't know. You probably knew this because, you tend to know more stuff than I do. But the junior tranche has taken losses. And it's not because Athena's had negative yield. So I didn't realize there's a hurdle rate. There's effectively a minimum APR the senior tranche is going to get. And if the senior tranche, if the senior tranche can't get that through the organic means of the yield, it takes from the junior tranche.
Yeah. So
I think it's like 3%, but I'm not sure.
I think that like basically the idea with this is like if we're going into the depths of a bear market, then probably not a great asset to be in. If you think that the markets are flipping bullish and like the Athena rate's going to go from like 4.5,
the junior tranche is amazing.
Yeah, if you think it's going to go from like 4.5 to, I don't know, 9 or 10 maybe for getting super bullish again, it is a great asset to be in, and it would be a great way of kind of expressing market bullishness. It seems it's earning
$32 million.
Yeah, and it's earning 12% like real underlying yield. So that's pretty nice.
Plus points, plus Strata points, and of course the Athena points.
Well, that's like very small amount of Athena points. And I'm not sure. I don't know the Strata multipliers very well. I think it's pretty low, relatively speaking. But like 12% real yield it is nice, right? So yeah, and then
pretty dang good.
Now we're looking at refi REXYZ. The only thing that like turns me off of these markets is how long they are. Like, so much happens in 169 days in DeFi. It's hard for me to commit to any position wanting to be open for that long. Like I'm kind of like I like to enter a Pendle position that's like at most 60 days. Like if I was really pushing it, I might do 90.
Okay, but like hear me out. I think we can agree like 13.5 is a reasonably high IY. And an IY that will probably, over the next 170 days, go down at some point. It may go back up, but at some it's going to be a non-linear up and down IY. So you could jump into it at 13.35, set a limit order for like 11, right? And then if it goes down faster, you've made more of your return faster.
Except it's earning 12.73% real yield, so it probably never get to 11, right?
Fair point. Yeah, that's true.
And so like if the markets are flipping bullish, this is probably another one where the points get valued for more. Maybe they're earning more yield.
Right.
You know what I mean?
And then all of a sudden you're stuck in the PT because IY's gone.
Yeah, and then IY actually spikes up to 17 or 18%, and then you're in a position underwater for 169 days. So like,
no, that's a good point.
I don't know. Like I hear what you're saying. I think in different kind of market conditions, if we were bullish and you were bought a PT at 20% expecting it to go down, I can get on that train a lot more easily than buying something at 13.5.
I mean, even 16, 17% seems like kind of like the higher end of a few of these. Yeah, I mean, it's a good point. And also as a reminder, RUSDE, this is refinancing. So they are reinsurance. They insure insurance. And somehow that makes sense. They've explained it to me like 10 times. It's just because it's not DeFi native, my brain kind of shuts down when they start explaining it. But I do look into it. A lot of people like it that I know. So
also they do a lot of on-chain yield farming stuff too, I think.
Well, that's REUSD.
Okay.
So REUSD does the basis trade, and it's like it's effectively like SUSDE. REUSDE is their more risky tranche, which is why it has a 12.73% yield, and it's doing like RWA reinsurance stuff.
Got it. Interesting. And then here's the former king. Like I mean, I just point this out because like there was times when like USDAI was like 35. I think it was even up to like 40 or maybe 50%. I mean, it was like depegged. I think like at certain points, what did it go up past 3? Was it like 4%?
3%. Yeah.
3 or 4% depegged, which like was part of the reason why people didn't want to like kind of arbitrage that back down. But it's crazy to see this thing, you know, and like there's other markets that are even lower for it, like below 15%. I wonder when they're going to do, you know, their airdrop. This was like such a hyped stablecoin project, and it feels like it's gotten a little bit of a tarnish.
I mean, 212 million here. I think it's 89 million here. I think it's still fairly hyped. It's just that.
Yeah, but it was at like 700 million, I think. So like if those are the two main assets, I mean, no, those are both just the staked assets. So maybe it still is super massively big. I thought it had come down a little bit, but no, I mean, they're doing great. I'm just saying that like there was this mania phase around them. And I think we've just like seen a bit of like a mean reversion from that.
I'm just checking. Yeah, so TVL actually has come down. You're right. It was 700 million. I mean, you know, from 700 million to 690 is still pretty dang good. But it has come down some. And if you ever are interested in like knowing what they're backed by, historically it's been 99% T-bills. They had planned on to status, so getting closer to these loans, I suppose. Still, yeah. So actually, it went from 99.9% T-bills to now 99.8%. So they are 10 bips more exposed to these things, NVIDIA H200s and RTX 5090s. So there you go. And those APYs are much higher. So I think it's the case that for this one, the staked version does take on junior risk. I don't know if that's true.
Mm-hmm. Yeah,
I think it might be true. So I did want to, we mentioned Maple earlier. So I did want to touch back on Maple and just like show you guys something that was pointed out to me yesterday when I did my leveraged yield thread, which is that there's $12 million to borrow on a syrup market that's at like 30% net. I will warn you guys, though, here it is right here. So I will warn you guys, as I have before, that one, auto leveraging can be dangerous. Oh, this is a PT market, by the way. This is the 29th of January. Yeah, so it's not, yeah, you only got like 23 days left. I would not enter this unless you were fairly confident that IY was going to compress. But even the one above it, so this does not have a lot of liquidity. But there was, yeah, so there's $12 million here. It is kind of short dated. It is interesting, but probably I would do the Camino instead because Camino has, you know, there's no end. There's not PT markets, and they go on for a while, which also kind of brings us to Prime. So I think we're not like Pendle. Once you get to the 10% range, I get less excited about it. I don't know about you.
Yeah, especially with like, yeah, no, I agree.
Yeah, you get like a grab bag plus the letters, like, you know, just throw your alphabet soup on the floor, grab some letters, and put USD on the end. And that's probably what you're getting for a few of those. But Prime, I've talked about this a fair amount. I've talked about this probably too much, considering, again, completely unassociated with them. Last time I talked about teams I was completely unassociated with, it went very poorly. Everyone was like, "You took money from them." I'm like, no, I didn't. I just talked about them, and that was my mistake. But Prime, so Prime is HELOC based. This is on my Hastra. Hastra, effectively another real world asset thing. So you know, you have homes that are the collateral for HELOCs, which are loans taken against those. Those are typically between like 7 to 8% in the amount of yield they can generate. That is the yield of Prime. Prime being the stablecoin representation of those loans, and then you can leverage it against cash. Cash is the stablecoin of the Phantom wallet. Anyone who's used Solana knows what that is, and so it's pretty good. And there's a fair amount of liquidity to borrow against these markets, so I like those. And then, of course, like if you don't want to be exposed to RWAs and HELOCs and things that seem kind of difficult to liquidate if you had to, there's Syrup, which has been anywhere between like 7 and 20% fairly consistently. Right now it's at 10%, but again, this number kind of bounces around. If you want us, the cool thing about Camino, no association with Camino either, is that they show historical rates. So if you want to get a better idea, like if I was to just like draw with my finger a moving average on this, it would probably be somewhere around 7.5%, 7.5 to 8%. So 8% on a stable coin that I can just like set and forget for a while seems pretty good. But of course, you know, like there are some days where you'll be getting 17.5%, some days where you'll be getting like, if you go 3 months, they're like, well, oftentimes I've seen these go to like 25%. So I think these moving averages are not showing the actual peaks of the spikes. But so yeah, I mean, I like it. It's pretty good. And then I was also looking at Jupiter Lend. Juplend. The thing that is good about it is that oftentimes they have high APRs. The thing that's bad about it is oftentimes they're at capacity. Right now, the high APRs are, so max net, 12%. Maybe not too exciting, but if you're bullish on Sol, all of these staked Sols can get you up to 20%. And so I have a buddy who does a lot of like CME basis trading for Solana. And so if you can jump into the CME basis trade and get 20% on your long leg, it can be a pretty good strategy for delta neutral folks.
Mm-hmm. Yeah.
And then, we're already at 10:06. Oh no, I did want to just like briefly mention that SummerFi, I did some calculations like yesterday, I think, on SummerFi. So SummerFi's tokens like officially coming out this month. They voted on it. It's happening. The team's like, yeah, like hell or high water, it's happening. So they even released their tokenomics, which was the thing that was holding them back. They delayed TGE specifically to hash out all their tokenomics first. And a few things that I didn't know that I had misconceptions of. One, the summer that you have farmed is going to be fully liquid. They're not doing any like, we're going to give it to you, but you have to take a haircut if you want it. They're not doing that, which is kind of cool. They already have staking tokenomics. You can actually already stake your illiquid, untransferable summer, which is kind of neat for like a theoretical 3% in USDC. Of course, if FDV is lower, it's higher. I can show you that here in a second. So it has a real use case. It is getting rev share. It's getting 20% of all revenue. So you're getting USDC revenue, which is neat. And that's coming out at the end of the month. So if you're like me, so I have unintentionally farmed quite a bit of summer just by using their lend aggregation products and using their like SummerFi Pro back in the day. And so I have some. And this is why, I was trying to see like, is it a win-win situation regardless of price? And I'm kind of split. So it'll be cool to kind of get your take on this. At these FDVs, these are the USDC APRs. So like right now, they're assuming a 200 million FDV, which is why they're showing 3.48% APR in USDC. If the FDV is lower, that means your USDC APR is higher. So if it's 50 million, you're getting 13%, 14% in USDC, which is fairly wild for a USDC native reward. And on top of that, you're getting summer. So you're also getting summer emissions. So I don't know what those would be, but like you're additionally getting those. And then of course, if FDV is higher, then everyone is happy because their airdrop is bigger. But of course, the USDC staking APR is going to be lower. So that was just like something I was working on the math for yesterday. And I think it's kind of like a win-win in that situation. Obviously, people probably want a larger airdrop, but I do like that the lower the FDV is, the higher the APR is. So
yeah, I think this is,
in that sense, there's like something positive to look at.
I bet you this thing launches a pretty decent FDV just because it's been around for so long and they do have a ton of TVL just like sitting in Summer Pro and lazy summer and all this stuff. So, the only issue that I know that they had was they were affected, I think, by DEUSD compound lending or something like that. But besides that, they've had, a pretty good run of things in terms of being a safe place to park stables. So I think this thing probably has a pretty good launch. I think that we probably see a pretty typical like shape to the, like token price where a lot of people realize their airdrop since people have been farming this for a very long time. And then I do think that like the fact that they have, this kind of like inverse correlation where if the token price goes down a ton, like the staking rate goes up significantly, I think probably will help them. And people may buy this to stake it and earn those rewards. I'm also just super interested to see what they're going to be doing with summer token incentivization after TG. Are like these pools going to be incentivized with like liquid summer tokens? That would be very nice to know. It's always a great place to have like safe, safe is a difficult word in DeFi. Good risk adjusted places, simple places to drop your stable coins if you're earning, lending yield plus summer tokens on top or something like that.
Yeah, that's right. And if you look at, you can look at the tokenomics on this page. It's like 35% is going to be there's a huge allocation to the community. And so it's somewhere in here. Seeing how that sort of plays out, here it is, community 35%. How that goes to incentivization should be interesting. It looks like there's around an 8% inflation rate right now, so like staking rate. So that on top of the 3.51% should be something, right? So at least if you have summer like me, you probably want to pay attention to this and make sure that when things unlock, you're prepared to do, to like make those moves accordingly. All All right. I mean, that's most of the big things that I was talking to Patrick from DeFi Dynamo, and he showed me this uranium thing. He's a uranium maximalist. So I was looking for like, can I buy any uranium on chain? And I still haven't really found one. This is cool, but you have to like contact them. I don't think you can just buy it. Maybe I'm wrong, but it didn't seem like there was an asset that I could just like go and ape into. Maybe there's something on Hyperliquid. I don't know. But that's just sort of been where we're, yes, $80. We broke $80. Okay. And so, there's also this really cool Boros tool we're going to get into, but I know we're like 10 minutes over. Last thing is, Solstice and IPOR. So IPOR, have been checking out these things. We talked about this last week, the IPOR SD ETH loop. The reason why I like this is because I was talking to a friend recently and he's like, well, the CME basis on ETH is really good right now too. You can get like 9 to 12% annualized just shorting ETH on CME because of the contango. And so like, what does he want to do with his long leg? And he was like, well, I could lend it on Aave for like 1% or like, stake it for like 2.5%. I was like, well, you could do this. And the reason why it's cool is because it does the looping for you. You don't have to eat the swapping in or the swapping out. And it optimizes the lending, which means that if the best lending is on Morpho, it'll lend on Morpho. If the best lending is on Euler, it lends on Euler. If the best lending is on Aave or any mixture of those or combination of those, that's what it's going to be doing, called debt swapping. And so I think it's fairly cool. 6.5% consistently is a pretty dang good rate for just like zapping in, zapping out without eating the slippage. So that's been cool. And then of course, like Infinify Points Max, we've been talking to teams. I want to get this on Pendle because I want like those 12x points to be able to speculate on them. And then of course, like Solstice, they've stayed at 300 million TVL. So shout out to them. I'm still playing on Exponent with some of those markets. And I'd say that, there's a lot of other stuff I want to talk about, but we've jammed your head full of yield
13.4% for USX
has gone
PTs has gone up, and that's pretty decent, I think. Only 33 days
and
left.
Even the EUSX has gone up to 10%. So,
what are the LPs at right now? As a last thing, just because I'm in them still. I'm in one of them, I think. Oh, these are still pretty low, but
yeah, not particularly exciting.
Yeah, fair enough.
But you are getting flares, so there's that. I'm like, if you go to the flares leaderboard, I think I was number 3 last I checked.
Oh, nice, man. You're doing well.
Yeah, thank you. All right, so that is it. Thank you guys so much for watching, and of course, as always, have a wonderful rest of your day.